This video is created by Jagrat Creation. It is on redemption of debenture. I wish to solve one sum here before you. Just observe the sum on the screen. This is the sum which I wish to solve here before you. Hindustan Limited issued 50,000 6% debentures of ₹100 each on 1st of January 2014. The debentures are redeemable by creation of sinking fund. Company has a right to call upon trustee to apply the sinking fund money to purchase own debenture if available below par. The following information is available. Annual appropriation 50,000. Sinking fund balance as on 1st of January 1,31,942 represented by 6% state loan. 74,262 is the purchase price of face value of loan 80,000, and there is a sinking fund cash balance of 57,680. The cash balance, which includes the annual appropriation of 50,000, was invested in 6% loan. The loan bond was purchased at cum interest, had a face value of 60,000. 1st of September 2017 sold the state loan of a face value of 40,000 out of the loan held. On 1st of January 2017, 38,000 ex-interest and proceeds were applied to purchase the own debenture of a face value of 45,000 ex-interest. The debenture purchased are cancelled on 31st of December. Interest on state loan is receivable on 31st of March and 30th September. Interest on debenture is payable on 30th June and 31st of December. Debenture outstanding on 1st of January 2017, 4,67,000. Make a ledger accounts in the books of the company and give the effect of above. This is a very important sum. How am I going to start with this sum? First of all, I will start with the opening balance. So G point, debenture outstanding on 1st of January 2017, 4,67,000. So these debentures were issued on 1st of January 2014. But we are required to prepare debenture account for the year 2016. So I will start with the we are required to prepare the debenture account for 2017. So I will start with this opening balance on 1st of January 2017, 4,67,000. So first of all, I am going to record the opening balance of liability in debenture account 4,67,000. Make ledger accounts, make ledger entries in the books of company. Now, how many ledger accounts we shall require? There is a sinking fund balance, so sinking fund account will be prepared. Represented in 6% state loan, so state loan, sinking fund investment in state loan, that account is going to be prepared. Sinking fund cash balance 57,680, so sinking fund cash account will be prepared. Debenture liability account, then sinking fund account, sinking fund investment in loan account, sinking fund cash balance account. There is an annual appropriation of 50,000 is a part of this 57,680. So annual appropriation will be considered once again at the end of the accounting year. So when we conclude the sum year, we should not forget that annual appropriation is to be made. Now, so these are the opening balances will be recorded. Over and above, we are required to prepare one debenture interest payment account, debenture interest expense account, and we are also required to prepare interest on sinking fund investment, the interest income that we receive on sinking fund investment. So how many accounts we are going to prepare? We are going to prepare one sinking fund account, second sinking fund investment in loan account, debenture interest expense account, interest on sinking fund investment account, income account. Over and above, we are required to prepare sinking fund cash account. Own debentures are purchased. See, on 1st of September 2000, sold the state loan of a face value 40,000 out of the loan held. On 1st of January 2017, rupees 38,000, and the proceeds were applied in purchase of own debenture. So we are required to prepare own debenture account. So these are the various accounts that we are required to prepare, and we shall record all these transactions in the accounts that we have prepared. So how many accounts I told you? Debenture liability account, sinking fund account, sinking fund investment in loan account. The loan is sold and the own debentures are purchased, so own debenture account, debenture interest account, interest income on sinking fund investment account, and sinking fund cash balance account. These are the various accounts that we are required to prepare. Now, in what sequence the transactions are going to be recorded? The first transaction that has taken place is out of this sinking fund cash 57,680, 6% loan is purchased. So in B point, all are the opening balance, but from the cash balance available, the loan is purchased, come interest. That is the first transaction that I am going to record. So first of all, I am going to write down the opening balances. Which are the opening balances I am going to record? Sinking fund investment, sinking fund cash, debenture liability account, and over and above the accrued interest receivable on sinking fund investment. Because my accounting year is a calendar year, starting from 1st of January to 31st of December, but the interest dates on state loan is 31st of March and 30th September. So on this investment in state loan, the last interest was received by me on 30th September and I am starting my accounting from 1st of January. So interest on sinking fund investment, so interest accrued, interest recoverable on the sinking fund investment, that also I will be recording in the opening balance. Now let me start with this. So first transaction will be recorded on 1st of January. After 1st of January transaction is recorded, next transaction will be recorded considering the date of interest on sinking fund investment and the date of interest on sinking fund investment and date of interest on debenture liability. On debenture liability, the interest date are 30th June and 31st of December. On sinking fund investment, the interest date are 31st of March and 30th September. So we should always take into consideration this date, 31st of March, interest on sinking fund investment. 30th June, interest on debenture payable. 30th September, interest recoverable on sinking fund investment. 31st December, we are required to pay interest on debenture. So these are the interest dates are also required to be kept in mind while solving the sum. And because of all this, see, the peculiarity of this sum, that so many transactions you need to record, they are not ostensible on this, apparent on this sum. They are just in guise. They are indirect transactions which you are required to work out, trace out, and you are required to record. Now, after explaining these things, let me start with the sum. So these are the sinking fund account, as I told to you. Interest on sinking fund investment account, sinking fund cash account, own debenture account, that is sinking fund investment. Sinking fund investment is 6% state loan account, 6% debentures account, debenture interest account. So these are the various accounts that I am required to prepare. This sinking fund, funds accumulated to redeem the liability. Interest on sinking fund investment. Whatever the interest, annual interest occurs at the end of the year, that interest will be transferred to sinking fund. Sinking fund cash account. Then own debenture, sinking fund investment. This is also sinking fund. So these are the various accounts that I have prepared. I'll start recording opening balances. I start with the last 2 points. Let me write down the interest date at the top so that I can keep an eye on it while solving the sum. So these are the interest date for interest payment on debenture liability. And interest date on this investment is 31st of March and 30th September, that you should keep in mind. Opening balance, liability. Now I'll consider the balances given. Sinking fund balance 1st of January, 1,31,942 opening balance in sinking fund account. Now it is represented by state loan 80,000 nominal value. Its purchase price is 74,262. Now the state loan opening balance on 1st of January As I told to you, last interest was received there on 30th September. So 3 months interest has accrued recoverable on this loan, and that should be considered when we write the opening balances. So sinking fund in accrued interest. So 80,000 into 6% into 3/1. So this is interest receivable that is recorded as balance carried down in interest on sinking fund account. This is the interest recoverable at the beginning of the year. Now cash, sinking fund cash balance, that is given to you 57,680. I write in a bold fashion because I want to bifurcate into 50,000 contribution in the real balance. This cash balance, which includes the annual appropriation of 50,000, so this balance includes 50,000 amount appropriated. So it is bifurcated into two parts. Bank transfer 50,000, the annual contribution, and the remaining is the opening balance 7680. This is how this opening balance of 57,680 gets recorded. Now from this cash balance available, what is being done? The state loan is purchased. What is the face value of state loan purchase? 60,000. So 60,000 state loan purchased by payment of 57,680. Now, the loan bond purchased cum interest had a face value of 60,000. So 60,000 face value sinking fund investments are purchased. They are purchased cum interest. And at the cum interest, the payment made is 57,680. So whatever the cash balance available was there, wherein was invested in the sinking fund investment, there is 6% state loan in that security. This cash balance is invested, and this total is a cum interest price. Look at the working that I prepared. Now when you purchase this state loan, you are required to pay X interest price, and also you are required to pay interest till the date of purchase of investment. The date of purchase of investment is on 1st of January, and the last interest was paid on 30th September. So you are required, or we are required, to pay interest when we purchase this investment. So face value of investment purchase 60,000. The cum interest purchase price is 57,680. Last interest was paid on this loan was 30th September, and this transaction has occurred on 1st of January. So 3 months interest is to be paid. So in 57,680, the 3 months interest last 30th September to 1st of January. So 60,000 into 6% into 3/12, this is the interest element. So X interest purchase price of from this cash balance, the X interest purchase price of this sinking fund investment is 56,780. So let me write down the journal entry. Sinking fund investment account debit. Interest on sinking fund investment account debit to cash account credit. So investments are purchased, cash is paid, cash account is credited. This interest paid, debited to sinking fund interest, interest on sinking fund investment account debited, cash account is to be credited. This is how this cash balance is applied for purchase of this 6% state loan, and this total amount 57,680 is a cum interest price. So interest element is to be disassociated, and it is recorded in this fashion. Now this B point is over. Now, before we proceed with the next point, 1st January transaction is done. You should always keep 4 interest dates in your mind. 31st of March and 30th September for interest receivable, and 30th June and 31st December for debenture interest payment. So these 4 dates you should always keep in mind. So before you proceed with the next transaction, we are required to pay, we are going to receive interest on 31st of March on this investment. So sinking fund interest, investment interest. So total investment held 1,40,000, 6% into 6 months. sinking fund cash account debit to interest on sinking fund investment account credit. Now when this investment purchased, this interest was paid. So this interest was paid for 3 months. And we have credited the interest on the same amount of 60,000 for 6 months. So 6 months interest is received out of that 3 months is paid. And on this opening balance 80,000, you have received an interest for the entire 6 months period. But against that, this accrued interest of 1200 is adjusted. So 4,200 is the total interest income for 6 months. Out of that, this is an accrued interest received at the beginning of the year that is adjusted. So this is 2,100 total. So 3 months interest was paid at the time of purchase of additional security. 3 months was the accrued interest. Net is the income for the current year. That is the income for 3 months. That is from 1st of January to 31st of March. If you work out the net income is 4,200 minus 2,100. 2,100 is the net income. That's an important point to be understood. Now, is there any transaction between 31st of March and 30th June? 30th June is the date on which the interest is payable. Look at it. There is no such transaction in the sum as I told you. So debenture interest is to be paid on 30th June. Debenture interest account debit to bank account credit. Here bank account is credited cannot be recorded here because debenture interest is the expense of the company and that will be paid out of the company's bank account. This is a cash account specially for sinking fund purpose. So 31st of March and 30th June is over. Next transaction has occurred on 1st of September. Now see, 31st of March, interest receivable. 30th June, debenture interest payable, paid. Now next interest date on this investment, 30th September. Before that, transaction has taken place on 1st of September. What transaction has taken place on 1st of September? On 1st of September, the nominal value on 1st of January was 80,000. Half of it means 40,000 is sold. So, this sinking fund investment, 40,000 is being sold. And whatever the cash is received there against, that cash is applied for the purpose of purchasing the own debenture. So on 1st of September 2017, sold the state loan of the face value 40,000 out of the loan held on 1st of January 2017. To 1st of January 2017, the loan value face value 80,000. 40,000 means half of it is being sold. Is being sold on what date? On 1st of September 2017. And what is the sales value? 38,000 ex interest. And the proceeds were applied in purchasing the own debenture, face value 40,000 ex interest. This is a very important transaction that students should focus. Now see, 80,000 was the state loan at the beginning of the year. Out of that, 40,000 is sold. Ex interest 38,000. Now this has been sold on 1st of September. When we sell the security, we receive interest till the date of sale, starting from last date of interest. So here up to 1st of September, we are going to receive interest from last date of interest. What was the last date of interest? The last date of interest was 31st of March. So from 31st of March to 1st of September, 5 months interest is received at the time of sale of this investment. So let me work out this. 40,000 is the nominal value. Now ex interest, sales value is 38,000. But when it was sold, I have received the interest for 5 months. As I told to you, that is from 1st of April to 1st of September. So 40,000 into 6% into 5 by 12, this is the interest received. So these are the proceeds. 39,000 is the cash that has been received at the time of sale of this 40,000 face value 6% state loan. Now let me write down the entry for that. Sinking fund cash account debit. Why sinking fund cash account is to be debited? Because the sinking fund investments are sold. To investment account credit 38,000. To interest on sinking fund investment account credit 1,000. So 38,000 credited, 1,000 debited, and interest account is credited for that. So when we sell the security, we receive interest. When we purchase the security, we pay interest. Now, these securities are sold. For what price? 38,000. What is the profit on sale of this security? 80,000 and half, 40,000. So 74,262. Half of it is the purchase price of this investment. So let me find out the profit on sale of investment. Profit on sale of investment, ex interest, sales proceeds 38,000. Now half of it, 74,262 into 1 half. Why 1 half? Because 80,000 is the nominal value of this and 40,000 is the nominal value sold. So half of it. So cost of purchase is 37,132. So profit on sale 869. Profit on sale of sinking fund investment. And when there is a sum of sinking fund and sinking fund investment, profit on sale of sinking fund investment is transferred to sinking fund. So sinking fund investment account debit to sinking fund account credit. So this investment account is debited and sinking fund account is credited for this profit on sale of sinking fund investment. So investment of 40,000 sold, profit on sale transferred to sinking fund. Now whatever the proceeds are there, 39,000 is the proceeds. These proceeds are applied to purchase the own debenture of 45,000. So debenture face value 45,000 purchased on a payment of 39,000. Now when you purchase your own debenture, it is also purchase of security. When you purchase, you are required to pay interest till the date of purchase. What is the date of purchase? 1st of September. So 1st of September is the date of purchase of own debentures. And when we purchase these own debentures, it is a purchase of security. We are required to pay interest till the date of 1st of September. Now till 1st of September, interest is to be paid. What is the last date of interest? Last date of interest for this own debenture is 30th June. So 30th June to 1st of September, interest is payable. So 39,000 is the total payment made for purchase of own debenture. In the 39,000 payment, there is a 2 months interest is paid and the remaining amount is the ex interest purchase price of own debenture. Let me work it out. So 45,000 nominal value of own debentures are purchased. What is the ex interest purchase price? Very important point. So ex interest purchase price plus interest for 2 months. That is from 30th June is 1st of July to 1st of September, 2 months interest is equal to cash payment. This is the formula. Now how much cash is paid? 39,000. Whatever the proceeds of this sale of state loan is applied for the purpose of acquiring own debenture. So cash received 39,000 on sale of the state loan is applied to purchase the own debenture. So cash payment is 39. This is the most important point of this sum. Now from this 39,000 I will deduct 2 months interest. 45,000 into 6% into 2 months interest. So this is the interest element. So now I will get the ex interest purchase price 38,550. So 38,550 investment in own debenture account debit 38,550. This is the debenture interest payment. Notice it, very important point. To bank account credit. So investment in own debenture account debit to cash account credit, sinking fund cash account credit, debenture interest account debit to sinking fund cash account. This is how this transaction is recorded. Very important transaction. So transaction on 1st of September is recorded. Now what is the next sensitive date? Next sensitive date is 30th September. On 30th September, I will receive interest on this investment. So 80,000 plus 60, 140 minus 40. So 1 lakh investment are still with me. That is 6% state loan. On that, I am going to get interest at the rate of 6% on 30th September. So next transaction that I will record for interest on 30th September. So 1 lakh into 6%. 6% loan is there for 6 months. So sinking fund cash account debit to sinking fund interest on sinking fund investment account. So on this investment, I have received the interest. Interest is credited to interest account. Cash is received, is debited to sinking fund cash account. Now 30th September is done. What is the next sensitive date? Next sensitive date is 31st of December. On 31st of December, two things has occurred. Cancellation of debenture. Own debenture purchased are cancelled. So redemption of liability. So 45,000 own debenture are cancelled against the debenture liability. That has occurred on 31st of December. On 31st of December, we are required to pay interest on this debenture liability. And when we pay the interest on debenture, we are required to pay interest on investment in own debenture till the date of cancellation. That's an important point. So on 31st of December, there is a cancellation. So 45,000 debentures are cancelled. So debenture liability account debit to investment in own debenture account credit. Debenture liability account debit to own debenture account credit. So debenture account is debited for redemption of liability and own debenture account is credited. The difference between these two, 38,550 is the purchase price of own debenture. This is the liability that gets redeemed by this purchase price. So there is a profit on cancellation. Generally, profit on cancellation of debenture is transferred to capital reserve. But in this sum, profit on cancellation of debenture will not be transferred to capital reserve, but it will be transferred to sinking fund because this own debenture is a sinking fund investment. That's an important point to be understood by the students. So, and when you redeem the debenture, see, when you are following the sinking fund method, the sinking fund investment in your own debenture. Own debenture are applied for the purpose of redemption of liability. So what is the entry for that? Debenture account debit to own debenture account at 45,000, that is done. Now profit on cancellation of debenture, that will be transferred not to capital reserve, but it will be transferred to sinking fund account. And when the redemption of debenture occurs under sinking fund method, the extent to which the debentures are redeemed, the amount has to be transferred to general reserve. That's an important point that students should remember. These transactions just comes out of understanding. They are not apparent in the sum. That's an important point to be noticed. So sinking fund account debit to general reserve account credit. So 45,000 transferred to general reserve. Now profit on cancellation of debenture 6450. Generally, profit on cancellation of debenture is transferred to capital reserve, but in this sum, it is not going to be transferred to capital reserve. It will be transferred to sinking fund account. So, own debenture account debit to sinking fund account credit, profit on cancellation of debenture. Now, cancellation part is done. Now, we are required to pay an interest on debentures. So, 45,000 into 6%. Into 4 months interest, own debenture interest, you have to write the adjustment entry on interest on own debenture till the date of cancellation. When these debentures were purchased, 2 months interest was paid. Debenture interest account was already debited with 2 months interest payment. Now, on the date of cancellation, we are required to record the entry for 4 months. Why 4 months? Because 2 months interest paid on debenture was debited to debenture interest account, was not debited to interest on own debenture account. Remember, so debenture interest account is already debited with 452 months interest. Now 4 months interest entry is to be recorded, and you have to record the entry for interest on own debenture till the date of cancellation. Date of cancellation is 31st of December. These own debentures were purchased. These own debentures were purchased on 1/9. 1st of September. So September, October, November, December, 4 months investment sustained. So 4 months interest is 900. For that entries to be recorded, debenture interest account debit to sinking fund, interest on sinking fund investment account credit. So all sinking fund investment interest is credited over here, and this own debenture are also sinking fund investment. So interest on this own debenture for 4 months is also credited to interest on sinking fund investment account. Now you are required to pay debenture interest to the outsiders, 4,22,000. So 4,22,000 into 6% into 6 by 12, 12,660. Debenture interest account debit to bank account, debenture interest is paid. Now every year what amount is transferred to sinking fund? Remember, 50,000. That should come to your mind when you conclude the sum. Now this is the nominal value, closing balance of nominal value 1 lakh. This is the total. This is the value. Now on 31st of December, we are required to write the entry for accrued interest, because last interest on this investment was received on 30th September. 3 months have passed till the end of the year. So accrued interest entry will be recorded. So 1 lakh into 6% into 3%, 3 by 12. Interest accrued account debit to interest on sinking fund investment. So sinking fund investment is to be recorded as closing balance. Now whatever the total income, net income occurred during the year, interest on sinking fund investment, that interest will be transferred to sinking fund account. So 10,600 minus 2,100, this is transferred to sinking fund account. So interest on sinking fund investment account debit to sinking fund account credit. This is how sinking fund interest is transferred. Here there will be a debenture interest is also transferred to profit and loss account at the end of the year. On 31st of December, profit and loss account debit to debenture interest account credit. Now you are required to write the entry for annual appropriation every year. What amount is transferred to sinking fund? 50,000. So profit and loss appropriation account debit to sinking fund account credit 50,000. This is how entries are recorded on 31st of December. Interest on sinking fund investment transferred to sinking fund. Debenture interest transferred to profit and loss account. Annual appropriation entry is recorded. Now, I think I have 1, 2, 3 accounts are closed. Debentures account is also closed. Only this account need to be closed now, and this cash account. So this is the closing balance of sinking fund that will be carried forward next year. And in cash account, this total of debit minus total of credit. This is a closing cash balance at the end of the year. This is how this sum gets solved. This is a very good sum. I have tried to explain you this sum, writing the journal entry and preparing working notes. Now I want to demonstrate all the journal entries at one place and also all working notes in sequence at one place. Just observe. So these are the ledger accounts that I have prepared. While solving the sum, I have already recorded journal entries in this fashion as and when they turned up. I have prepared various working notes also. Observe all those journal entries and working notes at one place once again. So these are the various journal entries that I have recorded. These are the various working notes that I have prepared. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to